We resume our works. We have with us on the panel Mr. Ioannis Giannopoulos, who is General Manager of Crowe. He is Head of Tax Advisory Services. Good afternoon. We will converse on price transferring. It is a subject concerning entrepreneurship of our country as well, because we operate within the European Union anyway. But these price transferring, how do they originally affect company decisions? Thank you. I thank the Chamber for giving us this opportunity where we discuss issues of entrepreneurship. Price transferring is something that is of great concern, and we speak of priced transactions which are related. What we have to deal with is the arm's length principle. To see, therefore, the prices between the connected companies would be if a company was independent to us. Therefore, this whole subject, one has the part that concerns pricing. We should see whether the way we price, we create some kind of leverage on the result that might affect the calculation of tax towards the other company. In other words, we see here something that regards related companies, groups. For Greece, there is specificity because we have price transferring within the sovereignty as well, while in most cases, both in the European Union and all over the world, transactions concern trans-border agreements. Therefore, what we see here is that we try to find per legal entity to have the taxation basis responding to those transactions. If one considers that price transferring started on the rationale of a development, a growth incentive, because we want to use it as a corporate pricing tool, so as to be able thus to help companies and the model one wants to serve, and not cause to the legal entity, either legal entity, any problem. With regard to the tax basis, listening, also of us, listening about price, transfer pricing, what comes in mind is the audits by the IRS, which in most cases are not very legitimate. Of course, the audience knows what the reality is. They know what is the incentive, the legal incentive leading to such audits, the legal one, I mean. But this whole regulatory framework governing price transferring, what is it, Mr. Giannopoulos? As I said, price transferring was introduced in Greece in 2008, a law introduced by the Ministry for Development. For the first 3 years, there was merely the obligation to declare those prices to the Ministry of Development. Following that, it came under the remit of the Ministry of Finance through Law 2138, and ever since the auditing part starts. And now we speak of laws 41, 72, and 74, where through those two laws we audit transfer pricing. And by auditing, I do not imply solely the accounting data, but also the way it is affected, the way one plans and designs the price transferring. And the critical part for companies is precisely the way they design those transfers, because the law gives a certain margin within which one can move and see what is the one best servicing the business needs, but at the same time doesn't cause problem in the calculation of the base for taxation as set by law, not only for Greek companies, but also for foreign companies. We've heard recently, and we still do, that some rules, there's an effort to introduce some rules or to change perhaps some price transferring that the European Union has seen. That's why I ask. Let me reformulate the question. Do you believe that we will have events on this front that is in the framework of price transfer? Yes, there are evolutions, there are things changed, and it's only natural because as time goes by and while applying European or national law, problems arise, which each time the legislator has to solve, must find the optimal ways. Therefore, actually, in the last years, what we have been witnessing is the incorporation, the transposition to national law of directives and decisions of the OECD and EU. As I said in the beginning, price transferring have been introduced as a notion from the mid of the 20s. And actually, this is based on Article 3 of OECD on bilateral agreements. That is the way countries between them calculate how companies and profits will be taxed, either one or the other country. Therefore, what we expect now or what is to come, or if you like, a recent directive introduced, was the decision of the European Union on COVID, where it was announced in December of 2020 and was introduced in Greece and national law in 2021. This is a way we should handle things, and I say we should handle things because knowledge starts to be integrated and audit procedures and legislations affecting the European Union pass through laws so as to have equal footing and equal treatment between both the involved parties and the companies. Therefore, indeed, we expect things to come from the European Union, and we'll be seeing them. Some have already referred to some initiatives already taken. Well, yes, on the one hand, we've got the strategy that the company should apply, a group perhaps, for its taxation. On the other part, we've got the compliance part of tax compliance, that is. A company, therefore, a group, should put those things in balance and have it well balanced to be on equal footing. So what are the challenges that a group will face so as to be on equal footing, that is to have a strategically correct decision and compliance vis-à-vis tax authorities? What we should actually see, and I say we should see because I consider that on the price transferring subject, par excellence, it is considered to have a specialized consultant. It is more or less sine qua non because we've got interpretation of laws and the ways we should deal with the transactions. Most importantly, we must see which companies are considered related and for what reason. It is very easy to view the issue from the viewpoint of the businessman or the obligation. But the main thing is that on the basis of 4172, Article 2, we define which are the connected companies, either within the sovereignty or abroad. A second issue to see when we speak of price transferring and documentation of transfer pricing and the observation of the arm's length principle, we speak of documentation from the very first euro. There's important difference, however. On the basis of the law, they will have to declare the price transfer, the aggregate table be submitted to the ministry and have ready the sums of those price transferring when we speak of specific turnovers. This is the obligation vis-à-vis the law, which of course entails penalties and pecuniary sanctions for non-submission, modification, or fraudulent declaration. On the other hand, when there is price transferring, the company has to observe the principle of arm's length from the very first euro, regardless of whether it has the obligation to submit the table or compile a file or not. Therefore, the IRS will come along in the audit to see whether the company has complied in submitting the tables. The audit, however, offers the possibility to see whether the existing transactions observe this principle. This is basic that we should view. And the second issue is that now, as time goes by, we start having knowledge and experience, and we exceed the mere observation of prices and indices, and we enter the substance of the documentation of price transferring, which is to see whether the profit in each company is in direct relation with the respective tax, and then we enter the rationale to see the functional analysis of each transaction and see whether the value chain here offers the value of the tax basis that corresponds. So we don't see a transaction 100 euros, whether it is documented or not, but what is the operational analysis? What is the risk undertaken by the company? What are the risks undertaken by each company in the group? And depending on this analysis, us, the consultants, or the companies will conclude on whether observing the arm's length principle is the indicated one, or on the basis that of the risk assumed by each company. So you consider these are the elements that the company has to bear into consideration if they decide to make a price transferring. Yes, actually, yes. We start to view the transactions. As I said, most importantly is to have a policy of price transferring in the group. And then we should view, on the basis of the risk assumed by each company of the group, whether it indeed covers the percentage, the share of the taxation basis that it should. Let me give you an example. If a company has a transaction with a company, either in Greece or abroad, or in the European Union, or somewhere close, with a preferential tax rate, it is not that important. Actually, we must see who assumes the risk. That is a transaction of A to B, two companies that are related. Does anyone assume also the cost of financing, of production, and additionally the risk of returns or product returns, or also assumes the risk of debates, of rebates? As you understand, the company that has assumed the greatest risk, the greater risk, should have the biggest profit margin, comparatively speaking. So it's not important whether it has a lower tax rate. It's not only that. No, we first make the analysis to see in the value chain where do we have the biggest business risk assumed. This is the main reason. Now, do you believe that there's a future in that? Is there something to expect in the field of transfer pricing? Is there a part which should be either changed or the company should know that they are to deal with? Because economy changes, the framework changes, both the national and European framework changes. Everything will have to be adapted. So do we have things at hand that we'll have to know? Well, definitely we do have, and it could not be otherwise, because each year, every year, there are committees involved with a study on how taxation could evolve. Therefore, on this basis, even if we speak of price transferring and internal transactions within a group, it has been said already, one of the most important things is the climate change, but also the digitization of the labor market. The impact, therefore, of COVID on companies at large and society have dramatically changed the rules and the way we will be discussing about taxation and especially price transferring. Therefore, what we consider that will happen is that amongst the states there will start be some basis for joint calculation of the taxes to be imposed. It is something that we expect and look forward to. Or the well-known nomads of work. It's not that we've been listening to it for years, but actually we've reached a point where I consider that we are ante portas for that. And since we speak of that, we might say as well, but whatever we have been expecting, I may say in extenso, whatever you were expecting both from the OECD and the European Union and has been discussed is the impact of BEPS 2 that can be seen on the daily life. Two pillars were already created, one having to do with digital economy and the other has to do with the allocation of profits and presumable tax. This is something which is in force, has been discussed, will be approved by the European Union and will come along. And not only that, we already see many countries that have adopted BEPS 2 and who have entered the rationale of speaking of a just taxation of profits where profit is created. It's something which is gradually be accepted all the more so. So this rationale, we want to see the profit taxed where it is created, regardless of whether the headquarters of a company lies elsewhere. This was created mainly because of the gig companies, which have headquarters somewhere and offer products and services either directly or indirectly to the end user. Therefore, what is created now is that we want to have the income taxed on the basis the country, on the source, in the source, where it is created. This, to date, there is a discussion, if you like, where we speak of companies of more than 20 billion euros. It only touches 78 of the 100 biggest companies. But this is a trend which is being shaped for a just taxation. And I believe that what we said beforehand, as you mentioned, another discussion takes place to have amongst the multinationals especially a minimum tax that will be imputed where each company is operative and which should be approximately 15% on the turnover. This is what it means if a company has bigger or smaller tax rate. In that company, they should have to cover the difference of tax. Therefore, there's an effort through a more generic policy to start allocating the tax between countries where the income is created. And this perhaps eventually may create a trend for multinationals to have to submit an IRS return to one single country, not others. Anyway, the implementation of Pillars 1 and 2 is discussed and will be attained within 2023. There's also one more discussion at the level of European Union that has been discussed in the OECD, which is the renegotiation of Article 9 on bilateral agreements. And we look forward and expect the conclusions, which will affect the basis, the modus operandi of the price transferring, both at the global and national level. So there's a lot that we have in our plate. Yes, there's a lot at hand in the immediate future. And the value here lies in the fact that companies must be in very close cooperation with their consultants, so to view aspects. Let us please, we should not exceed our time, says the moderator. Yes, something important that I see for companies, that on many cases there is a kind of displeasure by the businessman saying that I have submitted my IRS return, I have paid my tax, why should I reform and calculate differently this tax in relation to another tax that I've paid for the legal entity. This is something that companies must view as a kind of strategy. It is there, it is imposed, and they could, through their consultants, to be at a rationale of being proactive instead of being acting a posteriori. Thank you, Mr. Giannopoulos, for this discussion, for a very hot topic. And there's a lot lying ahead, as you mentioned. I warmly thank you for your presence here today. I thank you for the opportunity you offered me to discuss such an important subject. And we are, of course, at the disposal, both of you and the Chamber, to further give explanations and help companies and the Ministry towards this direction. Thank you. Thank you. I also thank the American Hellenic Chamber of Commerce for inviting me to moderate some of these most interesting panels of the conference of the Tax Forum. I wish you every success in the continuation. Stay tuned. Other interesting subjects come along. Thank you.